All right, nice to have you here.
Yeah, thank you very much.
All right, guys. It took me a lot of time to be able to bring you to the show.
Yeah,
And
thank you.
one of the things I'm excited about is that, like he actually came and he told me he was gonna come and he came. And today we've been having conversations about educating Africans, especially those in Australia, on the system, on the economic system of this country and how they can be able to manage their finances, if possible, get through the system, understand the system, and use their finances rightly, build assets, and be able to also contribute to the economic growth of this great nation. All right, so welcome, sir.
Yeah, thank you very much.
Can you introduce yourself to the
okay. I mean, for people that don't know, my name is Emmanuel. My name is Emmanuel, and like most of my friends call me here, they call me Manny. Yeah. So I work as a credit analyst. I'm also like an associate. Professional accountant. That's the title, ASA. Mm-hmm. So I have just a little bit about my educational background. I started my bachelor's. I think that's the side of me that maybe some people don't know that whenever I want to introduce myself. So I started my undergraduate as an economics. In economics in Cyprus. That was around between 2013 to 2017, and I did. I also majored in international finance before moving over here in 2018. Wow. So I did my master's in banking and finance at Macquarie University. And after that, that was during COVID. Everybody know how tough things were during COVID.
That should be in Sydney.
Yeah, in Sydney, because I finished my master's in, I think, around 2020, and then I started working for a finance company, as God may have it. That was although during
So you work with a financial.
In Sydney.
So guys, the reason why I'm trying to allow him to give us his background is so that you know that the person giving us this information is actually backed. You understand? So it's not just follow, come and all those things. You understand? So if you're in Australia and you are watching this, just click on the share button right now and make sure you're following this conversation. All right, sir. So do you have any more introduction you want to give us?
Oh yeah. So I think from 2020 to 2020, I think to 2022, worked as a finance broker because I specialize in maybe as finance broking. Hopefully, I'm going to talk about it a little bit because I think even first time hearing the concept of finance broking is something that is not very familiar given where I come from, given the Nigerian background. Because even up to this day, people ask me what does a finance broker do?
So which part of Nigeria are you from?
Oh, I am from. Forgive me if I use my language. I'm Mwaba. So I come from a part of Nigeria called is like I'm originally from Imo State, but my family they do business in Abia State. So as I will always say, I went into business, following my dad to the shop every day. So even before I started working, I was already in business, at least learning how to count money. So, and I think that was part of my initial, part of the initial thing that motivated me into going, leaning towards finance.
Into finance.
Yeah, because I was like, oh my God, finance makes everything go around. I don't want to be like a backseater. I just want to go to the point, that focal point where everything happens. So, and just a little bit more, after working in finance, as a finance broker for a little while, then I did a second master's. I did a second master's in accounting. That was, I graduated from Torrance University.
In Australia here?
Yeah, in Australia here. So, and I graduated from that last year. So the key, the future has always been I'm someone that is it's not just about African, but everyone. I'm someone that is that is very passionate about educating people about finance. So I feel like
So quick one. What is the thing that baffles you when you meet like Africans and maybe some other foreigners and all of that who you meet in Australia, and what is the thing that baffles you that like they are ignorant about their finances?
I mean, it's not what baffled me. Okay, well, one thing is this. Africans, they are very hardworking. And they don't really take out the time to appreciate themselves, to appreciate how hardworking they are. Right? When I used to work as a credit analyst for a company in South Australia here in Adelaide.
Yes.
So my boss used to ask me, because a typical an average African does like 2-3 jobs. Yes. You know that for sure. How people they will have like 4 or 5 jobs. Yeah. And my boss will be like, Emmanuel, do these people sleep at all? I'm like, yeah, we Africans, you know.
I mean, so grossing like between $150 to $250,000.
Yeah, and they work so hard, and for the people that have the opportunity to, and I will ask them, do you own a property? And they'll be like, no. Then what are you doing with all your money? And they invest it back home. I'm not saying is like a bad thing, but what I'm trying to say is like, in most cases, I always advise anyone that cares to listen or wants to understand that if you can, the moment you can afford to buy a property, just buy one. The
moment, because I'm aware that some people, because of their visa status and all of that. But anyway, that's really good. Now let's the first question I want to ask you is that now you have been in this system, you understand what it looks like. So what's the difference between, let's say, as for example, we use Nigeria as an African system.
Okay.
Right. So what's the difference between the Nigerian African system, economic system, and the way it is in Australia? What is it like?
I think one of the biggest thing I would say that is something that is very, very intangible that lots of people don't know. It's more about like the system. When I mean the system, I mean their legal system is very, very strong.
Okay.
Because I think I believe that both Nigeria and Australia, they are all some sort of they are the democracy, and maybe their system of government is not entirely the same.
Yes.
But I feel like in Australia here, if you're going into business, be rest assured to some extent that your business is secured.
Yes.
But I mean, you don't have someone one day knocking at your door trying to be, because even before you get to the point where you want to start the business, you must have all your compliance document, and compliance is very, very. I mean, it's very, very difficult for you to operate in this landscape if you don't have the right documentation or the right qualification, because you know the law is going to come after you. Like they are going to come after you very, very hard. And also here in Australia, I think the consumers are well protected, are well looked after. Okay. I mean, you dare not joke with them because because when the government comes after you, and I think this is something that I usually encourage people, like when you want to invest there, just invest with the hope that you're not going to sleep and wake up and then find someone knocking at your door and trying to kick you out of.
Africa where you buy property and somebody is collecting.
And even here you have things like insurance that is compulsory even before even before like I know we're still gonna get down to that part, but even if you want to buy a property, before the banks, you even pay out the funds to the vendor. The bank will require you to have an insurance. You must. It's not even a choice.
I think most of the loans in this country, like all this servicing of stuff, you must have an insurance.
You must have because even the car the car you drive, at least at the very least, they will need you to have like a third party in insurance, even if you don't care for yourself so much to have a comprehensive to protect yourself.
Now, question is this. Now, what is it like? I mean, if you're going to meet an African person right now, the black community, and you think like you're going to advise them on how to handle their finances. So, first of all, how do you explain to them about what credit score is in Australia?
No,
how it impacts them.
Okay, I will. I'm going to answer your question. I'm not trying to deviate, but I've got this question multiple times. Someone asking me, should I buy a car or should I buy a house?
But sorry, but I feel like also.
I'm going to get to your question. No, no, okay, just I mean, this is question that
Yes.
that I always took on.
I'm enjoying the conversation.
I'm like, okay, I mean, buying a car, buying a house,
Yes.
I thought it should be like a no-brainer. I mean, you should buy a car if you really need a car, not if you want a car.
Yes.
Like, needing a car is like, I mean, obviously, for you to buy a house, you need to have income. And for you to have income, you need a car that will take you from A to B, from home to work.
Yes.
So, and when you're buying a car, maybe $5,000, $10,000, like, I'm not saying you should buy a shoebox, but at least something that you're comfortable inside that can take you from home to work. At least to give you the but if you're asking me, should you buy a car, you're thinking about $50,000 or $100,000 car.
Yes, you have to think about it.
I mean, you have to be, because that's equivalent to.
It depends.
Well, it depends where everyone is like financially.
Yes.
But I mean, it's not for me to decide.
Yes.
You know, deep down, if you go home and you open your bank app, you know where you are financially.
Yes.
So, but that's by the way. And the issue about credit score, you mentioned it. Mm-hmm. There's this thing I do, because anytime I'm having conversation with people, I try to maybe sometimes randomly bring up, because sometimes finance is not something that people are always comfortable to talk to anyone about. Yes, and I think it takes so much, not to talk of when you are in like a position, in a position where, I mean, I see 100, 1,000 financial the documents every day. So I mean, it is, people will always, I appreciate all my clients out there, for people that have used my services, which a lot of Nigerians have. I appreciate people that find that trust or find that comfort in me to help them. Help them. And also
by the end, you still tell us what you do, your services, what they are, you understand?
Okay.
So that people watching, by the end, to contact you understand?
So talking to people about their finances is like, you have to be very comfortable, very comfortable in your skin, and you have to also it's not something you just jump into. But but when I don't know, I'm not trying to dance around the question, because I will tell you there is no straightforward way. But one thing that helps me like all the time is like my profile is already, if you go to my LinkedIn or if you type my name online, people already know what I do.
So for instance, most people don't know what is credit score.
Okay, credit score okay. I will use, without trying to be too religious, I'm sorry. Credit score is, you know how growing up they tell us that on the last day when you go to heaven, God will bring out this big book of records and then show you, and then if there's any time you have ever done anything wrong, it is recorded on the book. Then even if you think God was not looking at you, and then you be like, oh my God, when did I insult Emmanuel? They'll be like, you did it. Remember that. So I think credit score is because most lenders, right, they don't know what your behavior is. I'm just imagine if you're a bank and I meet you I come to you to give me more money, and I have never held any credit in my life. You don't know if I've held any credit. Yes, you have the money, right? But how should I know? Most especially like when it comes to things like personal loan or maybe this small credit contract, how will I know that you're going to pay me back the money? Because I don't know you, I don't know your character, I don't know anything. So a credit score is more like, whenever you make any financial inquiry, it might be things like your prepaid phone, your prepaid internet, or so whenever you even your rents. I mean, if you listen directly from the landlord, whenever you make any of those inquiries it's like there's this company. I mean, there are lots of other companies that they have Allion, they have Equifax. So the one that I'm very much familiar with, which I use all the time, is like what's it called, Equifax. So most credit companies or most firms they somehow, when anyone makes an inquiry with them, right, in most cases, they report that inquiry to that credit collection in an agency. Okay. And when you have any credits with any of these lenders, let's just say you want to buy like a phone, and you before now you don't know what was a credit score, right? Then you go to, what's it called? I'm not advertising any lender, but I'm just using some lender. Let me just use lender A. Okay. Then you go to lender A and be like, hey, can you give me $2,500? Okay. I want to buy a phone. Then they now give you a phone. Then once they made sure that you're qualified for you to get that, they will give you the fund. Now, lender A will report to that credit collection in an agency that, hey, Emmanuel took out this amount of loan from me. So each month I repay back to lender A. Lender A reports that I paid on time. Each month I pay on time. So each month I default in my payments. Then they will report to that credit collection in an agency that I've defaulted. Okay. Now, let's just say why I'm still owing you, right? And I default, I missed out a few of my payments. And tomorrow I want to go and buy, maybe I want to go and buy like a bicycle, and I go to like a lender B. Lender B does not know my behavior with lender A. But lender B will have access to all my credit, all my credit transactions, just because they are part of this whole credit corporation. Then I now go to them and be like, I need money for my bicycle. Yeah. And lender B will now go back and do like a credit check on me and be like, but you have missed out. Now you're becoming like a riskier person to lend money to. Yes. You're becoming even if you tell them, hey, I earned $200,000. But lender B will not feel safe. Lender B will be like, it's very inconsistent, because actually at some point and this thing could be things as small as your phone bills. Yes. And that's why it is very, very important. Like whenever you're owing any lender, you should prioritize your, just because over time, today it might be just a phone, tomorrow it might be a card, next tomorrow. So all these things, this credit corporation or something, they kind of assign like a score to your credit behavior. Credit score, so the better you are in managing your credit, the higher your score, and that means the more trustworthy you'll become to lenders in the future. That's cool. So now, guys, are you listening to this conversation? This is very important. So we're talking about credit score, and you see what Emmanuel just said. So it's in this economy that we are right now. One of the things that would help you go far is having a good credit score, and we cannot mention that. So if you're having all these afterpay, what about Zip, all those stuff, right? So but there are some credit providers that participate in that reports to like Equifax, like things like your buy now pay later, Afterpay, Zip Pay, Step Pay, they are all classified. Even your I say HU, that's the new one I learned these days. Because people don't take those in serious. People don't take it serious. I've had somebody who went to buy a car, and the guy literally was gonna pay almost half of a car. He's got maybe a car of maybe, let's say, $40,000. So the guy was paying $20 and wanted to put the rest on credit, and then they checked his credit score. The guy was shocked because he will buy some things from all these Temu. I'm not advertising anybody anyway, and then he will not use Afterpay. And then sometimes the money will not, get in. He will not later just pay it at once. But those little. What you're saying now makes sense to me now. Then I said to the guy, you have a low credit. The guy was shocked. I said, what do you mean by low credit score? The guy said, so no, this one is like, at least people are informed about this now. And I think for your fans out there or your subscribers out there, one advice I will want to give them is, like, whenever you want to go and take out a whether it's a personal loan, a car loan, or whatever type of loan, and you get declined once, don't go over to the next lender. Just stop. Just stop there. Because why I'm saying you just stop until you find the reason why why your credit got declined, don't apply to the next lender, because see how this thing okay, let me just say we have bank A, B, C, D, E, F.
Okay.
Then I go to bank A to take out a loan, because most times they will decline your loan. They will not give you a reason why your loan is declined. You'll be like, oh my god, bank A decline my loan. These people, and you'll be like, these people are so stupid, they are so foolish. I'm going to go over to lender B, and you go over to lender B, make a credit inquiry, then they decline it again. Have you seen this is beginning to build up, and you go to lender C, it gets declined again. Then you're digging your hole, because the more credit inquiries you make within a short period of time, the more your credit score is keep reducing, right? By the time you have run through lender A, B, C, D, E, F, then at some point, by the time you get to lender F will now look at your credit score and they'll be like, lender A, B, C, D, E have already declined you. And then that means the fact that you keep making inquiries means that you're so desperate, you're financially stressed, because it causes them to put on their sixth sense, and they'll be like, hey, even without trying to find out anything else, they'll be like, they'll know that having made that same credit inquiries among 5 different lenders, because if you're credit worthy, one of those 5 lenders should have lent the money to you.
That's the word, credit worthy.
Yeah, but because you're not credit worthy, that's why you keep. So, and the more each of these lenders keep declining your application for credit, the lower your chances of actually getting a credit is. So that's why once you get declined, even if it's by the first lender, just stop. Maybe go and see a broker, or maybe try to find out the reason why that's that your credit application was declined before. Interesting. I think that this is something that I just with not just because the client base I deal with, they're not just our Africans, but also like Australian wide. So what I advise them, and even before I take on any deal, I get them to sign a consent form or anything, and then run a credit check on them. So the credit check we do is different from what the lenders do, because there's something called a hard check and a soft check. So because we are brokers, we are not credit providers. If we run like a soft check on them, it does not really affect their credit, because it's more like we are paying to obtain their so it doesn't. So we obtain their credit reports, run through them, call the client on the phone, and if they have any, I'm not gonna, without using anyone as an example, right? Then I have seen a few where then I call them. I have to call the client on the phone and be like, hey, you have a default. Do you remember this transaction? Do you remember this transaction? And then unfortunately they don't remember any of those transactions, because those inquiries were not made by them. Maybe your ID have been compromised, and people have tried to use your ID to obtain credit and got declined. But because it was your ID that was used to apply for those credit, it is now affecting your credit report. So and if you're sure that those inquiries or those transactions were not made by you, or it's just very easy, they have credit repair agencies. Don't give up or start crying or something like that. They have like they have credit credit repair agencies. You can go and file like a police report, and they'll also help you remove all those transactions from a credit file.
Wow. So that's a lot. So the reason why we're talking about this credit score is because most of the things that you're going to do in Australia would always refer to that. If you want to buy a property, he's going to be talking about property in the next one. So if you want to buy a property or anything, that's where it starts from. So now I want to ask a question. Like there are some people that we're talking about property now. So that's so some people that are on different kind of visas. So, and like Australia, the government has actually started trying to project something like if you're on temporary visa, you will not be able to buy a property in 2 years.
They're just saying you can only buy new property, you cannot buy existing
property. Okay, so now if somebody is on a temporary visa and also somebody, then the person have like few years to get a permanent resident visa,
Yeah.
and maybe have also people that are on student visa that are moving in and gonna be getting a permanent resident very soon. So and then probably they move into a temporary visa maybe for it and all of that.
Yeah.
So just the question is it good?
Oh,
Is it good financially? Good to buy to buy a property as a when you sit on a temporary visa,
when you're temporary visa,
because I know that the
Yeah.
little I know,
Yeah.
I'm saying this in so that because I'm trying to save people's mind now.
Yeah.
The little I know that when you're on temporary visa, there are some foreigners leave all those things.
Yeah,
Before you calculate it, it's
yeah.
like heaven and So I just want to ask: is it a good decision? And then from there,
Yeah.
I also wanted to actually help us to say where do we start from? Let's even say you now have a PR.
Oh, okay.
You
Okay,
understand?
so there was a presentation I did the last time. I took out the time to kind of work it out, and then I'm going to start from the big picture and then I'll break it down.
Yes.
So then I found out in South Australia, for example, if you're using all the government incentives available, if you're buying a new property worth $600,000, you only need 27,000 upfront.
Yes.
If you're buying a new property worth 600,000,
because it will cover the incentives, right?
I mean, if you take advantage of all the stamp duty waiver, the $15,000 cashback, the LMI waiver, if you take advantage of all
and the person is on PR. Because I'm saying this for some reason.
And the person is on PR. It's going to cost you approximately $27,000 dollars upfront, and you can. Obviously, you have to have an income because you still have to service the loan.
Yes.
But on the other hand, someone that is not on permanent visa, it will cost them $180,000 upfront. So I'm just going to start from there. I'm just going to start from there, and
that's crazy.
And I will tell you how it works, right?
Jeez.
So I think it depends on how deep your pocket is. Let's just say for someone on 500 visa.
Student visa.
500 subclass 500 is always student visa. You can buy a property, but what happens is like it depends on the state because each state have an additional stamp duty. Let's even start from the lending side, right? Most lenders, if you're on 500 visa, it's totally different from if you're on 491 visa.
So difficult.
So if you're on a 500 visa, subclass 500 visa, most lenders will only want to lend you up to 80%.
Okay.
Because they don't want you to go into the lender's mortgage insurance space, what's called like the LMI space. So they can only, so if you're buying a property of $600,000 in South Australia right here, then that means you have to come up with $200,000. No. 20% of $600,000 is $120,000. So $120,000 upfront.
Yes.
All right, for your 20% deposit, and maybe let's say you have the income, and given you have the income, maybe let's even say that you will find a lender that will lend you like the 80%. Then you have the what was it, the FIRB.
Jesus.
And then FIRB tax that is like almost $14,000. And then you also have to pay 7% of the property value to the state government.
Because you are on temporary visa.
Because you're temporary. So you have to pay that additional 7%
of
the property value.
Jesus Christ, man.
Then on top of that, this is on top of the normal stamp duty that you're going to pay on the
property. That's what it is.
So by the time you I mean, for people that are, people that still have the money. Right.
But what I'm trying to say, you are a financial analyst. So on your own terms, do you think it's a good move, or do they need to exercise patience and save more?
When it comes to Australia, right, I don't think this is not a financial advice.
This is
I don't think there's actually a wrong time to buy property in Australia. Because except if you're living in a mining town.
Hello guys, this is a personal opinion.
This is just like my personal opinion, obviously. So I don't think there's a wrong time to buy a property here in Australia, because I have never seen someone that bought a property today and they get to sell it. Because see, here is the thing. if you have the opportunity, if you have the money, like that huge upfront, I mean, and remember, like I was around your neighborhood the other day,
Yes,
right?
yes.
And someone was telling me that they bought their property like during that COVID period.
Yes, yes.
And they got the property for around $390 or $400,000.
Yes.
And that property today is worth over $600,000.
Of course.
So
Crazy money.
yeah, just imagine as at then, right? That the person was on student visa, and they bought that property for the still even after the whole spending the whole money, including all the taxes and everything. So the total cost to buy that property as at then was $500,000. If they now have PR today and they want to buy that same property, they should have been paying $600,000. See, the property have appreciated
100%. Nice. You're seeing, guys. You're seeing
right?
this.
So
yes, I'm saying
it's not something that has like a straightforward answer.
Okay.
So because if the person had waited until they get PR today
Yes,
and want to buy that property, they can no longer afford it because it's now 600.
They're gonna pay more. Even thrice.
Yeah, they're going to pay. So if you're willing, but we understand that this is Australia. It's so difficult to save because we have a lot of responsibilities, and some of us have responsibilities in Nigeria we have to take care of.
Yes.
So that's for. But
491.
Yeah, then for 491 visa, the difference. Oh no, okay, on the loan aspect. This is for 500 visa.
Okay, for student visa.
For student visa, why it is, if not difficult, impossible to buy a property on a student visa, especially if your student visa have work restriction.
Okay.
Because if most student visa, you're only allowed to work 24 hours a week.
Yes.
And the lending framework in Australia is such that for the banks to lend you money, you have to show them that you have the ability, the capacity to service the loan.
Yes.
So when I mean servicing the loan, it's just like I come to you and be like, Precious, I need $10,000 from you, and I'm going to pay it to you back in 2 months. Then you'll be like, just wait a second, Emmanuel, you're going to pay me $10,000 back in 2 months. You're on a student visa and you're restricted to work just 24 hours a week legally.
Yes.
Right?
Yes.
You're legally restricted to work 24 hours a week.
Yes.
And then you ask me, how much do I earn?
Yes.
How much do I earn every month?
Yes.
Like, then we determine that what I earn every month is just $5,000. $5,000, and you pay rent of $1,000.
Yes.
You are left with $4,000. You have expenses of let's say $1,000. Let's say you're single, and what's your left is $3,000. So without touching your income, after 2 months, the maximum you can save is $6,000. Then
how do you want to pay?
How do you want to pay 10,000?
How do you want to pay?
And I think this is also the reason why some of us we give money to lend money to our friends, and then because we don't mentally service them, after we complain that they don't pay us back. Because if you've asked for their pay slip, when they ask you for money, and then you'll be like, how
you will not give it to them.
Yeah,
I can't pay me back.
Yeah, it will be obvious that they cannot pay you back without going into for financial difficulty. So that this is how the bank assess. That is what is called borrowing power, because what the bank is necessarily doing is like that, taking your pay slip. That's why they always have to ask you for your pay slip or bank statement or to see your income and expenses. Yeah, because by the time they have seen your income and they minus your liabilities and expenses, then they will determine if you can repay that money over time. Yeah. So I actually, but if you're on like a research student visa that you have unrestricted, yeah, you can work on unlimited. So let's now go over to
research. Means you're doing masters by research and you're doing your PhD.
Yeah.
Programs don't have anything.
You don't have any work restriction on your visa.
You understand? And what he's saying is really correct, because sometimes it's difficult. It's a lot of pressure in being a student, and then so the borrowing power. Even some banks will not be able to. Especially with the Australian website now. Student visa now, they won't even talk to you. You understand?
Yeah.
Okay, so let's go to
visa,
like
if you're 491 visa, I think I also have to correct something too. Like for some of the states that charge like the additional stamp duty, like it based like states like ACT and Northern Territory. No, Northern Territory, they don't charge you that additional stamp duty.
Oh wow.
Yeah. I heard like even in I was talking to a colleague of mine, and they were in Canberra. The state government actually waive the stamp duty if you're on 491 visa. Yeah, they actually waive you if you're first home buyer and you're 491 visa. They actually waive, and this is the benefit that maybe people on 500 cannot get.
Yes.
Yeah, but in Canberra, yeah.
Oh, okay.
So if you're on 491 visa, the difference because banks, if you're on 485 medium to long term stream, that medium to long, that allows you to transition to to permanent residency and yeah. So I think most banks are now realizing right now that there's a pathway to permanent residency. So with that, I think these days they now allows you to borrow up to 90%.
Interesting.
Yeah, then that means you need to come up with just 10%. But I'm just going to talk about South Australia, obviously, because we are South Australia.
Yes.
Then that means you can borrow up to you can borrow 90%. You need to contribute 10% plus the lender's mortgage insurance, but you still need to pay the 7%.
Jesus. So let me finish. Let me say this, because of some scientists. You know, like we're sort of Christians, right? So when you're saying this borrowing, some people watching now,
okay.
You know what I mean?
Okay.
Because this is some of the things that we see in church sometimes. Because of the system here. So some people don't know the difference between mortgage, loan, all these things. So when they are borrowing, they feel like why would it be?
No.
So can you just give a little bit
it is the most difficult it is the most difficult conversation I used to have sometimes, because for people that it's not bad being too religious, but sometimes if I'm talking to people that and I use the word borrowing, they'll be like, in Jesus' name, I'll never be a borrower. So I understand, Sister Nkechi. I'm not saying you will be a borrower, but I'm just saying, I mean, you have to you have to face fact. I mean, where do you want to get $600,000 to pay for a house? I mean, everybody will tell you that borrowing is not wrong, but what is wrong is, what are you borrowing to do? Are you borrowing to do the dorime, or are you borrowing to do the dorime, are you borrowing to do I mean, are you borrowing to do dorime, or are you actually borrowing to invest?
Actually, I don't even know that.
So borrowing to do dorime is definitely wrong. It's 100% wrong, because who are you trying to please? But borrowing to invest, because why I say, okay, just take for instance, for now, you want to buy a house of 600,000 and you only have just 10%.
Even if you have more than, let's say you want to buy a house of 600,000, there's something you said one day I was talking to you. He said if you have 400,000, and there's a house selling for 500,000, he said if you use 400,000 and put in that house, you made it bad.
That's the definite, because I know for sure that $400,000 took you time.
Yes.
To save.
Can do two things for you.
And it can. So I mean, I don't know how long this is gonna last, but I wish. I wish I could be, because since like
okay.
The
actions will come that will make us do another one.
Okay. Because I wanna, like, for most people that are getting to talk about that, if you have a $400,000, and obviously, except if you're like a surgeon or some kind of a specialist doctor, you know how long it must have took you to save that amount. So for most home loans, there's something called an offset account.
Yes.
So an offset account is something like your everyday transaction account.
Yes.
But the difference is, like, it is linked to your home loan.
Yes.
So which means if you're owing $200,000 and you have and you have $100,000 in your offset account. That, remember, that offset account is an account that is linked to your home loan.
Yes.
And you have $100,000 in your.
That's like a mortgage thing for now.
Yeah. So then that means the actual interest that you're paying on your home loan is just, you're paying interest on just $100,000. I don't know if that makes sense. Because why the bank is charging you? Let's just say based on based on the current interest rate at the moment, the interest rate is around 6%. Let's just say, if on your home loan the bank is charging you 6% on the $200,000 home loan, the $100,000 you have on your offset account is actually earning 6%.
Wow.
So that means that $100,000 is offsetting the $100,000 on your home loan, which means if for example you have like another business somewhere, let's just say you have you're owing the bank $600,000, you have $400,000, and you're asking yourself, let me just put $400,000 on my home
house,
and buy the house, and just let me know that I'm owing $200,000. If you have like a business idea, so somewhere else, that gives you like 10%, 20%, why not invest some of those money there rather than dumping it? Because what you're trying to avoid from your home loan is just 6%. But you have another business idea that pays you 15% a year. Or so, you have another business idea that
So we'll be wrapping up. The last question I have is this: you have your PR in Australia, and you want to buy a house. So what's the journey? What's the best advice you're gonna give? You want to buy a property right now, like you're starting out and you have a partner residence.
The first thing is like, speak to a broker. Don't speak to your bank. I'm not anti-bank. Yes. But I would say speak to your broker. And you know the truth is this: it is a fee-free service. They don't charge you.
Yes.
Just speak to your broker.
That's the truth.
It's just free, or you can call me on phone, or maybe to your closest broker.
Yes.
You just for me, sometimes I tell the Nigerians, just if you want to speak pidgin, we go speak. I go just explain it to you anyhow you want it, right? So, but the first thing is speak to your broker. Tell them even if you don't have any savings, because people are so shy of saying that I don't have savings. It's normal.
It's okay.
It's like, just speak. Even if you have 1,000, 2,000, don't be shy of it. It's always good. You speak to someone. The person knows where you are at the moment, and then maybe between you and the person, you kind of the person gives you a plan of what you can do. Okay, this is the expenses I need to cut, and the person, because if you have a clear picture of how much you need to save up and how much income you need to be earning in order to get a loan, or in order to afford that property, it kind of encourages you to save, because sometimes the reason why we don't save is like, for some people, not everyone, is because you'll be like, what am I saving for? But by the time you get your money and you do these expenses, and there's money remaining in your account, you'll be like, it's time to do Dorime, right?
Yes.
So, but if you already set your mind on something that you're saving towards to, it kind of makes it easier.
Yes. In plain terms, so like, is it okay to? I'm bringing it easier for them to listen to.
Okay.
Because there's a lot of information we've given. So is it okay to buy a new house, or to buy an already existing house? Your first time in getting into it. What strategy do you give to your clients?
If it is a single client, these days, I'll be like, and depending on how much you have saved up.
Yes.
If you want to get into the market very, very quickly, I'll say buy a new house. Okay. Because buying a new house, number one, for a property of $600,000, I'm going to use that example.
Yes.
If you're buying an existing property, a property of $600,000, you need $65,000 in savings, approximately $65,000.
Yes.
But if you're buying a new house, you need $26,000
because the government.
Because of the government grants on the new house, right? Okay. You need $26,000.
That's personal opinion.
And if you are this one is like factual.
This is fact.
This is factual. No, not if you are a first home buyer. If you're buying a new property worth $600,000, you need, if you take into account the stamp duty waiver this applies to South Australia specifically. If you take into account the stamp duty waiver, the the $15,000 from the government, the lender's mortgage insurance waiver, what you need to buy a $600,000 property is approximately $26,000 to $27,000. That's assuming that you are going to borrow 95% from the bank, which is approximately $570,000 plus. Then if you're buying an existing property, then the amount you need to contribute upfront is between $65,000 to $67,000.
Yeah, because the government is not taking care of anything.
Yeah, because the state you only benefit from the federal government's new home guarantee, yes. But the state government, because I think currently the state government are encouraging. We have some people say we have housing crisis, yes, right? Yes, yes. And the government is encouraging people to buy more houses, so they have all these grants like if you're buying or building a new house or a substantially renovated house, but it must be like a new house, they will give you they will contribute $15,000 towards your the deposit, and they will also waive the stamp duty, and the stamp duty is sometimes huge. So now probably the question will be back to your audience: how much do you have saved up? Yes. Then that will kind of determine. So
what percentage it will be good to, like, what percentage do you advise people to get into a property?
I mean,
deposits.
If you have, also depending on the family size, it's not a one size fits all, right?
No, it's just like a couple and all of that. Yeah.
So I mean, if you can, I don't know, this area, can you still find something of 600, a new property of 600,000?
Yes.
So then maximize, just maximize your borrowing, 28,000, just get it. Okay. And also which because I'm not here to sell the state government. Yes. There are other programs like the equity share. There are some lenders there. There's this system provided by the government that you can actually share a property, share the ownership of the property with them.
Yes.
Maybe the government will buy in and be like a co-owner with you. Yeah, although people want to own their property all by themselves. But I mean, there's 100 opportunities, 100 ways to get into the property if you want to get
in. So guys, listen attentively. Emmanuel has given us a lot. I'm processing the things. I'll still go back to this video. But you know what? Like, if you look at the screen right now, you're going to see his social media handle, his contact details. So specifically if you're in Australia, make sure you contact him, especially if you're looking into getting into property and also trying to also check your credit score and all of that. He can give you advice on where to go and all of that. And now, last but not the least, is that
this is like the fifth time you said that, you know.
Yes, is that some people, for instance, we talked about it before we started. Is it good, like, you have like some money, like let's say you have like $10,000,
yeah,
and you're buying a car, and then the car is a new car, let's say, for instance, and then you deposit 5,000, half of it, and then later on they've given you to pay, like in 7 years time,
yeah,
and then spread it for you,
yeah.
Although we know you can pay it early. Later on, you just discover that some people just pay that money within 6 weeks, and you're asking them, then why are you taking the loan? So, and then I have some people say, no, you would have stick to that pattern, as it helps your credit score, it shows your health and all that. So what's your advice when it comes to that? I know that you like somebody having the greed and all of that, so you can do other things, but what's the advice when it comes to that behavior of trying to,
I mean, if the person is not concerned about having like what's it called, like emergency funding, or maybe if the person have too much cash,
yes,
or rather than because I'm not against people trying to close off their smaller credits if they can afford to.
Yes.
But what I'm just saying is, like, you don't have to, if you think you're going to take out, because I'm a big fan of someone having enough like emergency funds.
Yes.
Just to invest in just try to be liquid, because it kind of helps you in most cases take risk and do other business idea you want. So then I mean, if you can afford to keep it open and just go make your minimum repayment while thinking of other business idea. If you think closing it up at that at that point in time will maybe cause your family to
Yes.
to struggle a little bit.
Yes.
Just don't do it.
Just take it.
Just have that. Just have that like emergency for funds.
So question, does that really affect, let's say you now have it, this is a conversation we hear.
Yeah.
So this is the last, like,
Yeah.
I'm just going to guarantee. So when you finish this one.
And I mean, and also if you're saying like 5,000 or 10,000, it's not, but you know, yeah,
So
but when it's big,
let's say the person
it
has,
makes a difference.
Maybe say let's get $30,000, and the person is depositing like, let's say 10,000, and spreading 20,000, right? Now, would that affect the person when the person gets his or her PR and about to buy a property?
It to some extent it will. It also depends on your income, because just as I said, the way the bank calculates your borrowing power is your income minus your other liabilities minus your expenses, whatever that is left. So at that point in time, it depends on your entire financial situation. Then if you have more income and if you can service the new loan that you want, so definitely it will not affect it. But if you cannot, because if we go back to our example, Emmanuel earning $6,000 every month, for example, and by the time you deduct all my expenses, if my surplus was meant to be 5,000, now remember you have to deduct my repayment on the car. Now my surplus is 4,500. Then the question will now be, will that 4,500 be okay for me to be making my home?
So the reason I'm asking this question is because, like, I need them. These are scenarios.
Yeah.
So they're gonna ask you.
But I think maybe next time we talk about what's debt consolidation, because sometimes it's very, very important to consolidate your debt. Actually, not because I know I don't know, maybe next time we'll talk about it. Yeah, so but it's something that is very, very important.
Yeah, so guys, your reaction to this video is going to be very important. So if you want Emmanuel for us to be able to do this series again, let me know in the comment section, and then we'll be able to bring him back. And most importantly, I said to you guys, if you need like a broker, and you're also planning to get property, you want to inquire about property, and you don't know probably where to start from. Now, if you look at the contact, I'm going to be able to ask him to whatever he wants to, social media handle or whatever. That's where you're going to be able to send him a message and ask him all the questions that you want. Right, we want to thank you so much for watching, and the purpose of this video, of this particular series, is to educate, especially Africans, and most people are following me that live in Australia, how the system works and all of that. Anyway, I hope you make good use of your money. I hope you become more financially savvy. So last word from our financial analyst today.
As I always say, the best time to buy was yesterday. The next best time is today.
Interesting.
Yeah, so I'll be expecting your call.
Yeah. All right. So take care of yourself, guys.
Yeah, thank you very much.
Beautiful day.
Yeah.
All right.